On a day that saw shares of nearly every bank or financial firm lower, Citigroup shares buck that trend, rising a fraction higher after beating analyst estimates last quarter, chalking up a profit of $4 billion by pulling in more revenue in its investment banking unit and setting aside less funds for bad loans.
Now that Citigroup has reported its latest quarterly results, joining Wells Fargo and JP Morgan, investors are waiting to hear from one more huge bank, and that one may reveal more about the health of the banking sector than any other lender. Kayla Tausche tells us which bank and why as we begin a new series this week, Earnings Spotlight.
For Bank of America, it's been a year of reckoning. Legacy lawsuits put behind it, the stock doubling. And after years of pushback from regulators, capital is finally being returned to shareholders. Earlier this month, B of A took advantage of the good news with an ad campaign, reconnecting with customers now that it's had a facelift. But its biggest test comes Wednesday when the nation's second largest bank reports earnings. Sturdy rivals JP Morgan and Wells Fargo reported last week, showing some first quarter weakness. The reason? The mortgage boom going quiet. Homeowners once rushing to refinance at low rates, boosting banks' loan volume and canceling out thin margins. Now it's clear that's a thing of the past. Wednesday will show how much B of A had at stake there. Then there's expenses. Deep into $8 billion of cost cuts, thousands of layoffs. Analyst Jeff Hart is looking for progress in one specific area.
Big thing for Bank of America is how quickly can they get the problem loan mortgage servicing portfolio down, because that's where a lot of the expense saves come into play, and that's an important part of taking Bank of America from where it is now, which is not a particularly efficient bank, to where I think it should be and will be as one of the more efficient banks in the country.
Hart says the bank should benefit from more companies selling stock and bonds in the first quarter. Investment banking, a surprise positive for peers like Citigroup and Wells Fargo, with franchises far less developed than B of A's. Nomura analyst Glenn Shore says investor expectations for Wednesday's results are high, a welcome change for a bank with a troubled past.
Okay, I think Bank of America has been executing on their plan for a good year now, coming off bottom, improving their capital ratios, taking out costs where they need to, and the investment bank is actually performing pretty well.
The question, whether the momentum can continue. For Nightly Business Report, I'm Kayla Tausche.